Boys, welcome to the introduction of Operation Meltdown, the prop firm system that I'm going to be executing over the coming trading weeks. Everything here that you see in this document is backed by my trading data. This has to work. If this does not work, I'm not sure what's next. But in order to make breakthroughs, you got to take jumps. You got to do things that you have never done before. So this is what I'm doing. This is my next move. As promised in the previous video, I told you guys I would run you through the breakdown of the system that I'm going to follow. So here it is. Let me put it right here, set it in stone, record this as a milestone or a stepping stone in my process on this YouTube channel. You can see I'm documenting literally everything. So here we go. Here's the implementation of Operation Meltdown. And from here on forward, we'll see if it worked or if it failed. But here it is, set in stone, Operation Meltdown. This is the introduction. From here on out, I will be executing this, attempting it in prop trading. In order for any of this to make sense though, the first thing that I should break down is the edge itself. So I operate a low strike rate, outsized payoff model, which means most of the time I put on a trade, I'm losing. But when I do win, that win is a lot larger than my losses. As simple as that. So it's a high R, low strike rate. Let's do this percentage as a win rate. Low strike rate model. So you can see that from data. From the data, my win rate all time is only around 28%. And this is over 187 trades, including backtesting data and then live executed data through July 15th this year, 2026. So we'll get into this figure later, but for now, let's just focus on this. I'm winning 28.3% of the time, but my average win is 134 points, while my average loss is 38 points. So my payoff ratio is 3.54 to 1. I am winning 3.54 times what I am losing. And that is how the model is profitable over the long run. My median trade, you can see it right here, is actually a loss. You can see that my average realized R is actually a loss. So for the most part, I'm expecting a losing trade. The only way this works is if I allow my winning trades to run, to win. And that was the issue with trading the live account because I was capping my winning trades. So let's move on to number 2, the exit system that moving on to a prop firm is going to allow me to implement. So this is the primary reason for the whole operation because it solves two opposite problems at the same time. So before we get into the exit system, let's take a look at the win rate before and after a really critical system change that I made. So if you keep it up the channel, you know that at the beginning of June, that is when I had another huge pivot. So you can literally just go back and you can see another huge documented milestone in my trading career. What happened, what exactly I did, and what was the outcome from that. So I got so fed up with the mistakes that I was making over the duration of April and May that I took a step back. I prevented myself from live trading at all, took all my trading data, fed it to Claude, which is what I used to build this document that you see right here, and built out every piece of my system. I wanted everything defined, every single protocol that I'm following, every rule that I'm following, defined it. Started following that, and guess what? I had a profitable month on the live account in June, made $600 profit. So you can see that before the change, I was literally executing at a 20% win rate. But this is a sample size of 139 trades. All time, the overall win rate is 28%. After I made that change, again, small sample size versus large sample size. So not too significant, it's only 14 trades. But the win rate jumped to 38.5%. Another reason for the really small sample size was because I literally just completely butchered my trading frequency. I went from trading, and within this data sample right here, you can see it's only the course of a couple of months from January to May. So what is that, 5 months? I was literally taking like 40 trades in a month. In the entire month of June, I think I took 6 trades. The entire month. So that was another huge swing point within the change that allowed me to increase my win rate here. Now, moving on, here's the columns, the breakdown. Pre and post change, you can see the win rate changing over time. Wins and losses for each, broken down. Profit factor, trades per session, right? Look how much it dropped. Boom, crazy, fucking crazy, absolutely fucking crazy. And then my average win also went down because I was capping my winning trades at 125 points. Now this raises one of the problems with capping winning trades, or one of the reasons as to why I'm switching to profit in the first place. So the win rate nearly doubled when I dropped that take profit protocol from, going for the fat right tail, which is what makes the model profitable here, pre-change. Made the change here, cut the fixed take profit to 125 points. So every time I put on a winning trade, I was getting out 125 points in its entirety. The problem with this is that it does not allow the winning trades to run. So the win rate doubled and the average win fell on purpose. That was the fixed take profit method working exactly as designed. It's far more the setups now pay because I stopped requiring the ultimate objective to arrive before I got paid anything. So previously, here within this sample size here, I'm trading 1 micro and I am going for a fat ass trade. I'm going for 200 points, 300 points, and I had way too many trades where the market would run so far in my favor, never deliver my ultimate objective, and then reverse and come back on me, and I wouldn't get paid anything for that at all. So we'll look at that data here, right? So before, the cost is in the table. Average win collapsed from 171 to 125. So that is the right tail being amputated, basically what I just said. And it's why the profit factor barely moved despite nearly doubling the win rate. So section 2 exists to keep the higher win rate and get the tail back. So problem number 1, like I mentioned, I gave back enormous winners. I had way too many winning trades that ran so far in my favor, and I literally got paid nothing. And this is what made me really frustrated with my performance over the duration of April and May. Because this, right, I had too many trades where I should have gotten paid on my live account, and I did not. So you can see here, market ran 172 points in my favor, 249, 176, 179, 152, 135, 1,000 total points offered, 1,000 total points offered. Out of that 1,000 points offered, I only actually made 337 points. I gave back 728 points over the duration of April and May. So these are all the trades that ran over 125 points in my favor. So that's beyond the fixed take profit protocol, right? 728 points given back. So this was a huge pattern that I discovered in my trading. I was giving back way too many profits. And here's a breakdown of that graph. We have a visual, right? So here's that fixed 125 point take profit partial. This is going to be one of the things that I'm implementing in the new system. Look how far these trades ran in my favor versus what was actually captured. This much only made this much. This much only made this much. This much let it turn into a loss. Here, that was captured for the most part, captured for the most part. This much turned into a loss. So it just really stupid trading. And the reason this was happening is I had no trade management protocol whatsoever. Absolutely, like none. So what curbed this was the fixed 125 point take profit system that I implemented. That was the solution, and it worked. The win rate increased because I was no longer giving back open profit trades. I was securing wins. I was locking it in. That's why I was profitable in June, as well as some other factors. But for the most part, it was because I was taking winning trades and locking it in with a fixed 125 point partial. The issue is I was missing the additional capture beyond that. Because I'm just getting out at a fixed 125 point take profit partial. So the fix created a new problem. So in June, imposed that fix, 125 point take profit. It worked. Profit factor jumped from 2.48 from 1.46 in March. So March was a profitable month, and June was also a profitable month. My profit factor doubled in this profitable month because of that profit taking system I implemented. But on 1/6 of the trades and identical daily profit and loss, right? So I jumped the profit factor on 1/6 of the trades with that fixed take profit protocol. But it amputated the right tail that the entire edge is built to produce. So I've called the system, what do I call it? I call it optimal intraday swing model because I'm basically going for an intraday swing. I'm taking the trade, I'm timing the time, I'm trying to time the high or the low of the New York morning session and then ride out that expansion move for the rest of the morning session. That's what allows me to have these huge moves. So this is problem number 2, another area where I am just leaving money on the table, right? So this was problem number 1 of me leaving money on the table, and I fixed that. I corrected it. Now here's problem number 2, more money left on the table. You can see that these are the trades that I've taken on the live account in the month of June, where if I had the ability to leave a runner, this is how many additional points I would have made on another contract. So in this win, the first partial would have captured 125 points, right? Because that's a part of the take profit system I'm going to implement on the prop firm. First contract is always going to come off at 125 points. The second contract is going to be a runner to go for the ultimate objective, the farther objective, what my model is literally designed to capture. That is the move that produces the profitable expectancy of this model. And I'm completely cutting that out by limiting myself to only 125 points. So the second contract runs to 272 points on this trade, 1,000 points on this trade, 400 points on this trade, and 210 points on this trade. This is from that huge dump that we had on the 9th. It was a really, really clean, really, really good trade. And I basically only captured 1/10 of the move. So if I have a runner, this is the profit potential on that second contract. And that amounts to what? $4,000 value on a second contract. So the solution, this is what I am thinking. This is what I am thinking will work with this new system. This is, for the most part, why I'm making this switch in the first place. So contract 1 is always going to exit at the fixed 125 point take profit. That's it. On that fill, contract 2 stop will move to break even. Contract 2 will run to the stated objective or flat at the end of the day. Both exits are resting orders placed at entry time. So contract 1 pays me for being right about the setup. So it builds in the allowance for me to be wrong about directional bias and the ultimate objective while still extracting equity, because I could get the directional bias incorrect, right? I could get the ultimate objective that I have set for the day incorrect, but I can still pull out equity from the market. If I go for the ultimate objective every single time, if I assume that directional bias is right every single time, then I have to be absolutely correct. And that's where I have these huge trades that run so far in my favor and then come back on me. So the fixed take profit of 125 points allows me to be incorrect about those two factors. The second contract is what allows me to capitalize on that. So both problems are covered by simply implementing a partial profit taking system. So the fixed take profit is designed to extract equity while allowing me to still be wrong about directional bias or the ultimate objective for the day. Contract 2 pays me for being right about the objective. It restores the fat right tail the cap was destroying. A single contract forces both to be true at once, right? Basically what I just explained. If I'm only trading one contract, then I have to be right about directional bias and I have to be right about the objective. If it doesn't deliver that, then it's going to come back on me and I'm not going to make anything from the trade. So it's just stupid to go for that fat tail without ever locking in equity. It's retarded. But if I trade two contracts, what can I do? Lock in equity and then go for it. Move to stop to break even after the first partial comes off and then see if I can get more. So July 2026, rebuilt trade by trade. July is the cleanest demonstration because it contains all three classes, doubled losses, a give back in the system that the system rescues, and a genuine runner. So let's see. This is the month of July. Actually, I haven't looked at this table and broke it down yet. So let me see. Look at this data. Let's just disregard this table right here. I haven't digested that yet. So here are the same 55 entries that I took on my live account, recomputed, implementing the fixed take partial, or the fixed take partial profit system. So in the gray, this is my actual expectancy, what I actually made trading one contract. This is if I implement the fixed take partial, the fixed 125 point take profit system only in the blue here. So this is me implementing the make 125 points, then get out, you're done. This is how I actually performed trading one contract. So you can see right away that why is this in the wrong order? Okay. How would this, okay, I think for the data, May would have been a losing month regardless. Like regardless of what happened, May was just not good, losing month. But look at the jump from June. Crazy. And April as well, right? So April, this is what I actually made. If I just get out at 125 points, I would have made this. If I implement the split system, then I would have made this. May, losing month. July, losing month. So consider these two things right here. And this is what I'm trying to implement. So I've already tried this. And it worked. This is shown as equivalent to the blue because that's what I actually did. But you can see that simply redesigning the way I take profit, how that affects my P&L, how that changes my equity curve. So really key to just keep studying the data, keep refining the data, and then seeing what changes you can make. And then this was a huge change in my system that basically kept my account alive in June. Or this was the whole reason why I was profitable at all in June. So here's my average day profit and loss by the numbers of trades I've taken. On 1 trade days, I am averaging $371 a day. 2 trade days, I'm averaging $7 a day. 3 to 4 trade days, 31. 5 trade days, this is where I go to the tilt cascade. Okay, and this is how I'm going to protect myself on the funded account, because the issue is never passing evaluations. That's not hard. I can do that. The issue is keeping the account. And this was the one change that I made in June that literally took me from being not profitable, having 2 consecutive red months, as well as the fixed take profit protocol on top of that, to actually pulling a profitable month. So trading past 1 day is the door to the tilt cascade. If I allow myself to trade more than 1 trade, I take a loss. I take a second trade. I also take a loss. I take a third trade. I also take a loss. That's when I start to get emotional. That's when I start to go on tilt. That's when I start to go crazy. And that leads to things like this, absolutely blowing the account. If I only allow myself to take 1 trade a day, guess what? All of this is eliminated entirely. And this is the only reason why I've been able to keep the account alive in the month of July. In July, the market got really hard, got really shitty. I did not have a good read on it at all. And I went on a losing streak. I went on a drawdown period. But guess what? Account stays alive. Why? Because risk is managed, because I'm limiting my frequency to literally just 1 trade a day. So again, all this gone. Complete game changer. Huge. Absolutely huge. So on the days that I get directional bias wrong, a second trade becomes a third, and a wrong read compounds instead of capping. On April 1st, I took 6 consecutive losing shorts inside a 2.5 hour window. Every single one was tagged forced trade. I mean, 6 consecutive losses in a single session. What the fuck am I even doing there? If I limit myself to 1 loss, then this doesn't even exist. It's not even possible. It's not possible. So this is how I blew every funded account that I ever had, was a tilt cascade. It wasn't one catastrophic trade. It was a day where I got the directional bias wrong, and then I kept trying that idea. So let's say the market, and this is what happened in April, May, right? We had a really strong bull market. It just kept rallying. I had a bearish bias. What did I do? I came in, try a short here, try to short here, try to short here, try to short here, and it just keeps rallying, and it never goes lower. And what do? 6 losses in a single session. Retarded. Dumb shit. Stupid. So these mistakes do not even exist for me anymore if I just take 1 trade a day. That's it. So how many losses in a row is it going to take me before I actually blow the account? This is calculated as well. This is the single most important risk number in this document. So a losing session under the split system means both contracts get stopped out. So I'm losing on 2 minis, or not minis. Sorry, not trading minis, trading micros for sure. We are not going to be trading minis, micros. That's it. So the trailing loss limit is going to sit at $2,000 below the highest end of day balance it has ever reached. So what kills the account is not a bad trade. It's a run of them from the peak. This is exactly how I lost every Express funded account in the past. Again, is not one catastrophic trade. It's a consecutive series of losing trades. So how many losses in a row can I take before the account is gone? This is what my average loss would be. 2 micros, my average loss comes out to $223. More recently, when I'm limiting myself to 1 losing trade with the new system that I've built and implemented, my average loss comes around $162 trading 2 micros. So how many losing trades is it going to take me to lose the account? With how I've been performing in the near term, it's probably going to take me around 12 losses. If we, let's say, use a very, very conservative number and consider my entire performance over the entire duration of 2026, really, it's probably going to take me around 9 losses. So conservative number, if I continue to show discipline and execute the way that I have been, 12 losses. So here's the table, consecutive losing sessions. Here's assuming an average drawdown of $232 per losing trade. And this is assuming an average drawdown of 185, not even using this number, using one slightly larger. So the chances, and this is also very important to compute this as well. What are the odds that I will incur 9 losing trades, 10 losing trades, 11 losing trades in the area, the territory where I do reach blowing the express funded account? What are the chances that I hit these numbers? Well, over the course of 60 sessions, that odds is about half. So pretty probable, right? Over the course of 250 sessions, almost a guarantee. So over time, it's absolutely guaranteed that I'm going to run into a win streak of 9 losing trades. In the near term, probability is about half. 11 losing trades in a row, that probability drops to around 30%, which I'll probably sit somewhere around here, right? So the chances of me incurring 9 losses in a row, 11 losses in a row, 12 losses in a row, and blowing the account, definitely there. My longest losing streak across 70 live sessions is 6, which is here. That is going to happen. It is almost guaranteed that that is going to happen. Look at the probability of that happening over 60 sessions, over 250 sessions, 100%. And I've won in my record. This has happened before. I've taken 6 consecutive losses in a row. So the total drawdown that I would incur, and this number that is very, very likely to happen, is around $1,300 out of the $2,000 that I have the maximum risk on the account from peak equity. If we're assuming $185 average loss, then that would amount to $100 or $1,100 in drawdown. So this is probably around the maximum expected drawdown that I can expect to reasonably occur on the express funded account. So I got to keep this number in mind and not lose my shit once it actually does come around. So it happened once, but the streak column is the uncomfortable part. A 9 loss run is more likely than not inside any 3-month window. So 60 sessions, 3 months, it is more likely than not. So that is, kind of discerning, something I have to take into consideration. So the account is only going to survive if my average losing session stays near the disciplined error of $185 rather than $225. At $185, it takes 11 straight losses, and 11 is a 4.5% event over the 3 months at the 43% win rate that the error actually produced versus 31.7 at all the data rate. So running the full simulation, the probability of breaching an account within 3 months is 4.3%. Within 6 months, 10%. Within a year, 20%. The gap between that and the streak table is because real losing sessions vary. Self-roll near 0, winners interrupt runs, both are true. Both views belong here. So the controllable variable is loss size, not luck. Every session that goes past 1 trade pushes the average loss from $185 towards that $232 amount. And the survival math from 11 losses down to 9. So this is why I absolutely have to lock in on 1 trade a day. That's it. No choice, not optional, have to do it. All right, now here's where shit gets crazy. How I'm actually going to attempt to pass the evaluation. Now, let me explain, because this, for the most part, gambling, 100%. But you're gambling on an account that is fake. And the real risk of the account is how much you spent to buy the evaluation and the time you spend on the evaluation. So for me going into this, those are the 2 things that I'm considering. This is what I'm risking when I'm participating in this evaluation. Is number 1, my time, and number 2, how much I actually spent on the account. Not the $2,000 account balance. So if I go in there and I'm taking a trade and I'm risking the full account, the real risk on the position is what? $100. If I blow the account in that 1 trade because I'm risking the full fucking account, it's a $100 loss. So my strategy, again, crazy, Would not recommend. The only reason I'm doing this is because this is what I've used in the past, and it has worked in the past, and this is how you get off the evaluation phase quickly. You save your time, one of the elements of risk, and you quickly move on to the express funded account where you can actually implement your strategy. So I'm going to be trading 8 micros. 8 micros, the target only has to be 94 points because there's a 50% consistency rule. I only have to make $1,500 if I'm trading the top step 50K or 50K account, right? So the profit target is what, 3K? You have to make half of that. That's 1,500 with 8 micros. That's 94 points. 94 points, extremely, extremely, extremely doable for me with my system, which is why the probability of me passing it is high. It is high. If all I have to do is make 94 points in the session and get on side with the market, with the direction the market's moving in, not hard for me to do. And with the stop loss of 125 points, extremely, extremely, extremely comfortable. 120 points is literally risking the entire account. Again, the risk is $100 in this case. That is the risk that I'm assuming when I am taking every single trade on the evaluation account. So if I lose it, the risk is boom, $100. And guess what? The next trade, I literally just have to run back another evaluation account. So that's basically what this is explaining. Just explain that here. And so because the stop consumes essentially the entire drawdown allowance, the evaluation has 3 possible endings. I can either lose, trade 1, and that's it. It's done. Or I can win and lose, and still, that's it. It's done. Because I would not breach the account entirely, but if I'm risking the entire $2,000 on the second trade, on the following trade, still risking 125 points, which would net an outcome of down $2,000 basically, the whole thing is done. So in order for this to work, I have to win and then win again, which means make 94 points and then make 94 points. Doable, passable. So if I do this, I pass and the target is met. The probability of me doing this is 87.3% with target of 94 points and 125 point stop. So the reason that the probability of this goes up is because number 1, I have more room for my stop, and number 2, I only have to make 94 points, both doable. So what does it say? After answering the obvious question, after a win, then a loss, is the account breached? No, this is just explaining what happens there. Kind of irrelevant. Consistency rule solves itself. 2 equal winning days always satisfy both objectives at once. So consistency rule breaking down, not necessarily important. And then how win rate response is structured, right? So this is the leverage that I am going with here because of the data here. So you can see by looking at the table, this is the optimal leverage for me to use when I'm weighing in the 2 factors of risk. Number 1 being the cost of the account, and number 2 being how long it's going to take me to get there, and then the pass probability computed from here. So stop size is going to drive the pass rate, and that's all computed from here. On the actual evaluation itself, which path would I take? Would I take the standard or the no activation fee? I'm going to take the no activation fee because in order for the no activation, or in order for the activation fee path to cost more than the no activation fee path, I have to sit 3 months on the evaluation, which is just really not going to happen. Now, finally, moving on to what happens when I actually do pass the evaluation account. So as soon as I pass it, the evaluation playstyle is going to end, and I'm going to trade 2 contracts, 1 trade per day, and then that split, that take partial profit system that I explained earlier, that is going to be implemented. Now, how long is it actually going to take for me to get paid? And the answer is, if I execute at a 30% win rate without, and this number right here is computed without the fat right tail trades. So this is excluding those big trades that I would capture, which the system allows me to capture. Without that, it's going to take me around 3 months. Including the runners, the two runners that basically would have carried the live account had I had the ability to capture that, would take me around 1.7 months or around 37 sessions. So if it only takes me 37 sessions to reach this number here, then if we consider the data above, I would never experience the period of 6 losing trades in a row. But I'm going to plan for 3 months and not 1. The conservative row strips out the single trade that carried the sample and uses a win rate below the one observed. So payout rules, I'm sure you guys already know this, a winning day of $150 plus, that is what counts as a winning day. You need 5 of those, and then in order to, you can only withdraw up to 50% of the balance, and I'm going to be capped at a $2,000, or your cap's at $2,000 maximum. And there's a 90-10 split, so I'm not going to request a payout before a $4,000 account balance, because then the 50% rule then leaves $2,000 behind automatically, and then after the first payout, the loss limit resets to 0 permanently. So what this is explaining right here is basically after you take a payout, what happens? The drawdown automatically locks to 0, right? So the drawdown stops trailing and it just locks automatically to 0 at $50,000. So whatever your account balance is plus 50 above $50,000 after you take that payout, then that is the new maximum drawdown that you have. So you have to account for a buffer. So if I can only take 50%, you can only request up to 50% of the total account balance, and I have to account for a buffer, then the ideal payout range for me is going to be around $4,000 account balance, because if I take that out, I take half of that, then what does that leave me? A $2,000 buffer. So that's it. So that's the full breakdown, standing rules, and these are going to be refined after I complete my audit with all my data. All my data, when I say all my data, I mean all my data. 1 trade per day. All exits, resting orders, placed at entry, no decisions. Wrong bias is 1 small loss, and I'm done. 1 losing trade a day, that's it. Stop has to move to break even the moment the first partial fills. Never sizing up after a loss. I don't even know why Claude put this in here, because I'm only taking 1 trade a day. I'm never sizing up ever. So, oh, that's actually what entered the previous funded account. Oh shit, okay. Thanks, Claude. Thanks for pointing that out. And then weekly review, drawdown from peak, partial fill rate, average loss size. This is what I need to be calculating on a weekly basis. So that is it. That is the full breakdown. This video was boring as shit to make reading this document. I'm not even gonna lie. Had to cut it out a couple times. But this is the full breakdown, all the data, all the trading data that I have, the next move that I'm making, and here it is documented on the channel. If this works, go back to this video, refer to it. This is why it worked, right? So here we go, another stepping stone on the journey. We'll see if it works. From here on out, all I have to do is keep working day in and day out, and execute it and see if this works. So that is it for this one, and I'll catch you guys in tomorrow's video.